Welcome to TradeTheNBI.com. This is John. This report is for the 18th of August. And of course, again, the other day we're getting some more action moving back and forth. It was interesting as we saw much more significant decline in the NBI readings, magenta moving below that 33, which is the threshold that we were looking at, and very close with yellow dipping below it. Shakeout falling dramatically, and something we talked about where the shakeout needed to continue to make higher highs as we were reaching new highs, but significantly lower histogram readings than previously. I mean, here we had the peak, dipped down, reset it, and started back up. And of course, this weakness could give us a little bit more of an exacerbated move. We are seeing, from a DOC standpoint, a little rise in short-term buyers, but still relatively weak from mid-term, long-term, and not surprising given the time period of the month. It's a little soft for new flows, that kind of thing. But still, ABM yellow, pretty straightforward here. Let's go ahead and mark what that is. 4,440 and a quarter. So that's the long above, which not too far off where we're at right here. Then of course you have the ABM magenta, and below that is definitely going to be much stronger shorting because that's a significant level. We've held above it literally since before the last dip, and when the last one happened, you had a free-for-all for a little bit from a decline standpoint. So I would suspect that we're going to get similar kind of behavior. We'd already seen that the NQ was a little bit softer anyway. It had already been well below the 30 levels. What you weren't seeing, though, is the activation of short with that NBI white moving above red, and until that does, you're really going to just see modest distribution, nothing dramatic. From a gold standpoint, the slow ebb higher, not a shock. Of course, we're continuing to see that supply disruptions, those kinds of things, may mitigate growth, but they're certainly going to add to inflationary cost pressures, and that's really what's going to drive gold higher as you start to see additional lockdowns. I mean, I think even New Zealand, one COVID case, and they locked the entire country down. These are the kind of disruptions that are going to really cause impact over time, and particularly even in China, more significantly, where they've had port closures, and that really could squeeze the supply chain, which will only inevitably cause rapid increase in prices as opposed to something that's more sustainable. And so from the euro standpoint, we would expect the continuation of the decline back into normalized levels, which we're getting very close to here. Once we get into that 116, 8 range or so, then we're starting to get back into the normalization of euro from its previous pop. And of course, within the Bitcoin realm, we had series of positive extremes, got filled back. Then there was weakness within this most recent pop that got right about 50%, and as soon as white NBI moved above it, moved all the way back down to that 0% level, right around 44, so still elevated relative to the dip range, but still off the highs. From an intraday standpoint, it was pretty clean. We had the intraday fill, if I would slide back just a little bit. We had the positive extremes. We were expecting those to get filled. We had the weakness, which happened. And then every time there was an attempt at buy configuration, it didn't take long for white NBI to pop up, and then we got the softness from magenta and yellow was sort of sideways, back and forth, but eventually would just break back down to the 0%. So then every time there was a little push, it didn't last very long. This one was a little bit more sustained coming across, but again, below that 50% when I see the white, I'm usually expecting that to break down. This one did fairly decent, got up above the 76, couldn't close above it before it started to break down, and of course went all the way back to the 0 range. And once that happened, we would just continue to see softness throughout every little buy setup that took place until a little bit later in the afternoon as it started to build a little bit, and that gave it a little bit more sustain where you didn't have the white NBI popping above, and that allowed for the continuation across. And so all we've done is move right back to the same algo level as before, the 46 to 39 range, and that's exactly where we're at. It's still looking at a little bit more softness at this particular point. That's the long and the short of it, the simple. But I think probably in the next couple of days we're going to expect broader ranges in volatility because of end of the month and as vacations end and we get serious for back to school. That's usually when the fireworks start taking place. So we look for that to start to build towards the end of the month. As always, though, trade well. I will continue to update charts on the Skype chat. Look for me there. Have a good one.